Hi traders, and welcome to my video on the bull trap trading strategy. I'm going to show you how you can capture moves such as this one for almost 600 pips by using this simple strategy. This is a Australian dollar, Japanese yen 1 hour chart in the MT4 trading platform. You can use this trading strategy on any trading instrument, Forex, crypto, stocks, commodities, indices, etc., and any chart time frame. You can also use it on any trading platform. Okay, I prefer to use the 1 hour charts and above, 1 hour, 4 hour, daily, weekly, monthly, simply because they contain more price data, and thus I find the candlestick patterns tend to be more reliable. Okay, so what is a bull trap? First of all, we got to find a bullish market, which we have here. Okay, you can clearly see this uptrend. Market is making higher lows. Okay, this is an established uptrend, higher lows. I'm very bullish. So the bull trap is basically traders who want to get in on this action but are too late to the party. Okay, you can see on the way up there was ample opportunity to enter. For example, the breakout there. Okay, would have been a potential entry point on this trend. If we just zoom out, there's actually a more significant level of resistance. So this would have been a good entry point. Resistance becomes support. Could have been on this trend nice and early. Okay, even on this pullback area to the trend line here, this pullback here to the trend line with that hammer candlestick pattern as well. Okay, this could have been a good entry to the upside here. Now what happens is, in a bull trap, people get carried away and they want to jump in on trends, but they're too late. Okay, so they're going to buy here. They're going to do a very amateur mistake, which is buying at the high. You don't want to buy at the high and you don't want to sell at the low. But still, bulls or wannabe bulls get captured in this trap, hence the name the bull trap. So what happens is people see this move, see all these bullish candles and think I'm going to buy. Okay, they're just not timing their entry. They're not waiting for confirmation. They're thinking, okay, there's going to be a pullback. For example, here they might see this and then they might say, okay, we've had a pullback here to this support level. I'm going to buy. You see that bullish candle there. For the people who were thinking this is a pullback, they're going to enter in on this trend. They're just entering at the wrong time. Price is far away from this trend line. It's not the time to be buying, and they get trapped. Hence the name, the bull trap. And what happens is they have their stop losses below the low, usually around here somewhere. And when they see their price turns around, they get either manually exit their trade or they get their stop losses triggered, perhaps just below support levels. And it causes a momentum shift to the downside. Okay, and the bulls are trapped. They try to get out of the trap, and this causes more movement in the bearish direction, as you can see from this example of a bull trap here. Had we been aware of what was going on in the situation, we observed carefully, we would have seen as well this strong level of resistance here. I mean, nobody should have really been buying this high and buying into this resistance. You'd want to at least wait for a breakout, okay, for confirmation, especially when we have these bearish candlestick formations as well. Yeah, so all the signs were there that there's going to be a potential reversal to the downside, yet people are still buying, as evidenced by this bullish candle, and then they got caught out. And had we been looking to take the contrarian trade, we would have sold on the breakout, either this line here, or if you want to just draw your more traditional support lines like that, you could have traded here. Either way, it's more or less the same entry. Price is trapped in this zone and it breaks up to the downside. If we just zoom out, you see this level of support here, this trend line would have actually been another entry opportunity. You probably wouldn't have wanted to go in after those 3 black crows bars as big as that, but still would have been a entry point. Do have a hammer pattern again and a bearish one. You also have this support level, then becomes resistance, so it's tested here. It holds up, it goes down. There's another pullback. there, and a breakout there to the downside, and we clearly see that we're now in a bearish run, and you can just take your entries on the breakout. In the new trend, nice M formation there. I do have a video on the M pattern. You see the breakout, big bar there. Also, nice level of resistance. Forming a wedge pattern here. So again, good confirmation for that. You have a 3 inside down, almost a 3 inside down candlestick pattern here. Do have a video on that as well. Extra confirmation. And as the trend continues down, there's ample opportunity to enter. Perhaps you don't want to wait. Well, not perhaps, you definitely don't want to be too late to the party and end up but selling too low. So the earlier we can get in, the better. This level of resistance here forming. Okay, nice wedge pattern again, and a breakout to the downside. Support becomes resistance, and we're good to go. Okay, so ample opportunity to get in on this sell trade. The bull trap is basically trying to get in as early as possible, which is up here. All right. Hopefully you wouldn't have been thinking about buying up here. I do have lots of videos on how to enter into trends such as this one on the pullback. And it doesn't involve buying when price is this far away from the trend line. I mean, if you need an indicator for confirmation, if you put an RSI on the chart, the RSI is also telling you, look, the market's overbought. Okay, we can expect a reversal to the downside. This is exactly what we get. Anybody buying here is buying into an overbought market. Okay, of course, the indicators aren't accurate all the time, but you also have your bearish divergence to the downside there, suggesting a bearish move. Add that to the breakout, and all the signs were good there. We're there for a good reversal trade into a new trend. Okay, granted, price could have broken out here and then continued up. That does happen. That's why we have a stop loss. My stop loss probably would have been above this high here. Okay, just cut losing trade short and then look to get in on the next move. I mean, if the stop loss was there around 20 pips, when you look at the profit potential of this trade, what, over 500 pips? I mean, even a few stop losses, you just catch one big move like this over the course of a couple of weeks and you make back that loss and more. Not to mention you can use a trailing stop on the way down, obviously. You don't just want to leave your stop loss here and in case price turns around and, a winning trade turns into a losing one. Pointless. You want to, or what I would do is put a trailing stop just above the high. So when there's a pullback, say we entered here on this breakout of the bull trap, down here, we had this pullback and then price continued down, my stop loss will come just above this high, just as after this pullback here. Okay, that's looking like a dead cat bounce there. And then a breakout to the downside, my stop loss will move here. After this pullback and continuation stop loss here, and so on and so forth, just locking in profit on the way down, and you can always close part of your position. What I wouldn't want to do is to, get excited, trade this breakout, and then jump out here with and leave all of that on the table. I mean, there's just no need. No better feeling than being in a winning position and just knowing that worst case scenario, you're going to make some profit, but you can potentially make a lot more without doing any extra work. If you do get taken out early, you can re-enter on these ledges. You see support and resistance. As you can see, I'm not using a fancy indicators for entry. I find them to be lagging. You might have the best unicorn indicator ever that shoots golden nuggets out his backside. I don't really care. I'm just using price action analysis. I think more traders should do instead of trying to find a quick fix with crystal ball indicators. But you do you. Going back to this dead cat bounce. A dead cat bounce is a good thing to be aware of. When you have a trend, okay, downtrend specifically, this is not to do with the bull trap, but I'm going to mention it because I've seen it. When you have a downwards trend, like this one, okay, as price moves away, this is known as the bounce. Okay, so you see trend down and then it bounces off this line, moves away. You can enter on a breakout of the support level. I mean, it's just a fancy name for the obvious, really. I don't know who came up with the name the dead cat bounce or why, but There's a few dead cats here actually. There's one there, dead cat bounce there, bounces off here, comes across. That's another dead cat bounce entry. I do have a video on the dead cat bounce, but at the end of the day, whatever fancy names are, it's just support and resistance and trend lines. And in my opinion, that alongside candlestick formations and sensible money management is more than enough to create a powerful trading strategy. As I mentioned earlier in the video, I find higher chart timeframes tend to be more reliable because they contain more price data. These theories probably won't work as well on 1 minute and 5 minute charts, which is why a lot of traders end up looking for miracle indicators that may look good historically, but they're going to be lagging and repainting and give you false signals and false hope. So, feel free to watch my videos on the various candlestick patterns and price action and the ways you can implement them within your trading. So that was a bull trap. I've waffled on about completely irrelevant stuff. Well, not irrelevant because you can apply it to your trading strategy. We just see that line there. Again, this is a significant significance of support and resistance. That line that we drew there. Okay, you can see, look, here and here. It's important. They're like self-fulfilling, So you could have traded a breakout there, basically. Nice bull trap, textbook trade. And there you go. Hopefully, going back to the RSI. This trend went on quite a bit. Going back to the RSI, when it shows divergence to the upside, when you start seeing this, okay, this could be a sign that the market is slowing down. The momentum of the move is slowing down, and you may expect a bullish reversal. And you can see with this consolidation as well. There may still be something left in the move, but you might want to consider just closing part of the position, perhaps taking some profit and expecting a turnaround shortly. Okay. So yeah, hopefully you found something useful in this video. If you could like and subscribe, that would be great and help my channel. Hope to catch you on the next one. Thanks for watching.